Good evening, everybody. Welcome to the First Time Buyers webinar. I'm Stephanie,
I see.
and we have Romain. And Romain. Okay. And yeah, we wanted to put this together to reach out to those who have essentially been on the sidelines. Like the way the market has been for the past few years has been very competitive. It's been very high prices. There's been interest rates. There's been a lot of market uncertainty. And we're really just wanting to reach out and inform people because we're recognizing that there's a lot of opportunity in the market today. And we really wanted to make sure that we reached out specifically to first time homebuyers to equip them with the tool and the knowledge that they need to be successful in today's market, right? Things are always changing in real estate. And we wanted to make sure that you understand from a real estate perspective. We're going to be sharing some properties with you that we see in the market. We're going to be sharing some strategies with you. We're going to be sharing some market stats with you. And then Romain as well is going to be sharing some information regarding first time homebuyers incentives, things to watch out for, understanding about pre approvals, really understanding about just the nature of things right now and how to succeed, how to plan to be able to get into your first home. The other reason that we put this together is honestly just a passion for helping and informing our community and those that are looking to gain more information on purchasing a home. So even if you're not ready to purchase today, we want to make sure that we give you the information that you need. They can start to become a little bit more aware of how things are working. Just know that we're here as a resource to help to make sure that you have all the tools and tricks and everything you need to be successful. So we're really happy to be here. We thank you so much for your time. I'm going to be watching the chat today. So if you do have any questions, please feel free to write them into the chat. We are going to have a Q&A specifically at the end. So please stay around for that, where we'll be able to address your questions specifically. So feel free to share. I definitely recommend that you have a pen and paper so that you can jot down any questions or any of the really valuable information that we're sharing here with you today. Again, we want you guys to walk away with the tools you need to be successful. Okay, so I am going to turn it over to Romain, our mortgage broker, so that she can get started with the presentation.
Great. Thank you, Stephanie. Appreciate it. And good afternoon, everyone. Thank you all for taking the time out of your busy schedule today to be here. Let me just confirm that you guys could see the screen. Can you see the screen, Stephanie?
We don't see the screen.
Okay. That's interesting. Okay, let me try this again.
Starting screen share. Looks like it's coming. There we go. We see it.
You see it?
Yep.
So let's get started with some honesty here. So most people, you know, I'm pretty sure you've already done this at some point. You've opened up a browser, typed in a neighborhood you love, and started clicking away. You found a listing, maybe two, maybe three. And then for a moment, you imagine yourself living in that space. You're imagining the kitchen, the backyard, the commute, the life, everything, right? That feeling, it's real. And there's nothing wrong with it. But here's what nobody tells you early enough, that the home search and the mortgage conversation are absolutely not at the same starting line. So one of them needs to come first every single time. Okay. So my name is Romain Tobin. I'm a licensed mortgage broker and life insurance advisor. And what I do really is make sure that when you walk into that space of, you're going to purchase your home, you walk in with clarity, confidence, and real numbers, not guessing. So today is really about what most people wish they had before they started. And that's started the conversation with a mortgage broker. So let's get into it. So I didn't get into mortgage and insurance because it sounded like a great career. I got into it really because I know what financial uncertainty feels like. So I know what it feels like to navigate something big and have this big dream and you have nobody in your corner to start with. That lived experience doesn't leave me when I sit with you, my client, right? It's the reason why I do what I do. So I've been in the financial space for over 7 years, I believe now. I'm licensed in both mortgage and life insurance, which means I see the full picture. So I have access to over 65 lenders. So I'm not married to any one product or one broker or bank rates, right? My job is to make sure I find what actually works for you, the client. My philosophy is I'm not here to sell you anything. I'm here to educate. Education comes first, always. So I want to make sure that you have clarity and there's no confusion. And like I said, when you walk into that house or you're walking in to purchase that house, you know what your numbers are. So a lot of times what I see is people fall in love with the house, like I said, and the heartbreak starts, right? So here's how it usually plays out. You start online, you're scrolling listings, you're saving favorites, maybe even doing a drive-by. And then weeks go by, months go by, and finally you have that mortgage conversation. And that's where you find out, oh my gosh, something is wrong here. Maybe it's a credit issue that needs fixing. Maybe it's your debt ratio issue and that needs correcting. And most times people don't know how to fix that, right? So what I do is sit with you and make sure that there's a timeline. It's making sure that we set what needs to be set in motion so that months ahead, you're ready to do your purchase. I've seen many times where families run into house hunting, they find their dream home, or so they think, and then discover barriers that could have been addressed months earlier. That's heartbreaking. And it's actually preventable. So the mortgage conversations come first every time. So these two terms, pre-qualification, pre-approval, they are not the same thing. And the difference really matters, right? Especially when you're in a competitive market, like Stephanie says, most times right now we're not really a competitive market, but last year we were, and we may be going back into a competitive market in the springtime. So pre-qualification is based on your information that you verbally share with me. There are no credit checks at that point. There's no documentation review at that point. It's just a conversation, which gives us really a ballpark of what an estimate for you might look like. It is useful. It's a useful first step, but it doesn't really give us a clear picture. Pre-approval, on the other hand, is very different. It involves a full financial review. So we're looking at your income, your debts, your credits, your assets. A hard pull on your credit is done at that point, which will result in confirmation from a lender. When you're making an offer on a home, especially in markets where you might have competing buyers, showing up with a pre-approval tells the seller that you are ready. So it signals also that your financing is real, and that changes the conversation. So when you hear the word pre-approval and think it's the same as when you hear the word pre-qualification and think it's the same as pre-approval, I want you to carry this going forward. Pre-approval gets you curious. Pre-qualification gets you curious, and pre-approval gets you competitive. So one of the most common questions I get is, how much can I afford? And I want to give you a transparent answer. When determining how much you qualify for to purchase a property, lenders look closely at two really important affordability measures. So the gross debt service ratio and the total debt service ratio. So these calculations help you to ensure that the mortgage and other financial obligations remain comfortably within your budget. So your gross debt ratio looks more at your housing costs. So this includes your income, your mortgage payments, your property tax, your heating costs. And the industry standard is 39%. On the other hand, your total debt service ratio looks at your housing expenses, so the expenses we just mentioned, and all the other debts combined. So that includes your car payment, student loans, credit card loans, everything combined. The industry standard for your total debt ratio is 44%. So being outside of these ratios does not mean you won't qualify for a mortgage. What it means is you will have to make some adjustments and you would be with a B lender as opposed to an A lender. So with a B lender, you're required to put 20% down payment as opposed to 5% or 10% down payment. So we're going to look now at the down payment requirements. So if you're purchasing a property that's under $500,000, the minimum down payment for that is 5%. Anywhere between 500 and just under $1.5 million. So that's your purchase price. The required amount is 5% on the first 500 and 10% for the portion of the remaining purchase price. So anything at or above $1.5 million, you're looking at 20% or sometimes more depending on the lender. Okay. So let's use an example here. So you go to purchase a townhouse for 600,000, right? So the first amount is 5% of the $500,000, which is $25,000. So 5% of 500,000 is $25,000. The second amount is 10% of the remaining balance, which is $100,000. And 10% of the $100,000 is $10,000, right? So your total minimum down payment would be $35,000. What I want you to really take away from this slide is affordability is not just the mortgage payment. There are other costs that are associated with the mortgage, such as your home insurance, property tax, closing costs. And if you're purchasing a condo, there are monthly condo fees that is considered as part of your total price of purchasing a property, right? So knowing your number is very important, right? Because we don't want surprises at the end. And I really sit with clients and make sure they budget for all these costs associated. Okay, so a first-time home buyer incentive or the first-time home buyer incentive was designed specifically for people purchasing, Canadians purchasing a home in Canada. When used strategically, it can make a big difference in your finances. So let's look at the first home savings account. This is one of the most powerful tools available right now. So you can contribute up to $8,000 annually with a lifetime maximum of $40,000. These contributions are tax deductible, similar to your RSPs. And withdrawals of your first home are tax-free, similar to your TFSA account. So you're literally getting the best of both worlds. So if you already have a savings account, there's the home buyer's plan that's available to you also. So this allows you to withdraw up to $60,000 tax-free towards your purchase. So if you are a couple, so if two people coming together to purchase this property, that's $120,000 combined. That's you can use for your down payment. This you have to repay in 15 years, but it's your own money working for you, really. If you don't have an RSP or a TFSA, let me know. I can get you set up on one. I do that also. So there's the home buyer's credit, which gives you $10,000 non-refundable credit in the year that you've purchased. This translates to up to $1,500 back into your pocket. And then there are the land rebates. So there's two types of land rebates. The first one is the Ontario Land Transfer Tax, which you can get a rebate of up to $4,000. And the other one is if you're purchasing in the city of Toronto, there's a rebate of up to $4,475. And last but not least, the GST new housing rebate. So this one, it's not quite in effect yet. It was introduced last year, 2025, but not officially passed as yet. But what it will do is eventually erase or eliminate the 5% federal GST tax on when you're purchasing a new or substantially renovated home. And also, it does have the maximum federal rebate. It's capped at $50,000, sorry, and a partial rebate if the purchase is between 1 million and $1.5 million, right? So these are options that are available, or incentives rather, that are available to you. And we work with you, or I work with you to see which one of them you qualify for. Okay, so let's talk about credit. I know this is where everybody gets nervous, but I want to change that, right? So your credit score, really, it's not a judgment on you. It is information. That's it. And information we can work with. So when a lender looks at your credit report, they're looking at several things. They're looking at your payment history. They're looking at if your payment history are consistent and with your existing obligations, your credit cards, your car payments, your loans, and how are you repaying those loans back, right? They also look at how much of your available credit are you using. They look at what your overall debt load looks relative to how your income is, right? They look at your credit history and how far your credit history goes back and how many inquiries you have on your credit history. So they also look at assets. So they look at the down payment that you have, where it's coming from, and so forth. And also the property itself. If it's a property, some lenders won't issue mortgages in certain areas. So these are all things that the underwriter or the lender looks at. Here's what I want you to understand though. You do not have to be perfect. You don't have to have a perfect credit profile to buy a house. This is where me and my 65 plus lenders come in to make sure you qualify for a mortgage. So what you need is a clear picture of really where you stand today so that we can create a plan for tomorrow. If your credit needs work, we build a roadmap. I'll tell you exactly what to do, when to do, and what order you need to do in order to fix or repair your credit. And this will put you in a strong position moving forward. There are many options to home ownership. We're going to look at them right now. So we're used to the traditional two people, whether it's husband and wife, whatever, common law, buying a home together with a down payment that they've saved for over years, right? And that's great. That's fine. But that's not everybody's situation right now. So there are other options to consider. So you can consider co-buying with a partner or with a friend or a family member. So co-buying means purchasing a property with somebody outside of a romantic partnership. So that can be a sibling, a friend, trusted colleague at work, a family member, and so forth, right? So another option to consider within the whole co-buying umbrella is shared equity, a shared equity program. So there are platforms like a company called Ourbora, and they're pioneering the whole co-sharing space or co-buying space, right? So they basically offer to help with a down payment to purchase your property. If you want more information, we can talk about that offline. Another umbrella under the co-buying opportunity or option rather is rent to own. So you can rent a property with the intent to own it later on, and you're building equity as you work toward your purchase. The other option is bank of mom and pop. I call it leveraging your support network system strategically, right? According to a survey done by CMHC, last year, they found that 41% of home buyers use a gifted pro or use the gifted program to purchase their property. That's what we're doing now, right? If you have somebody who can help you, let them help you. The first time home buyer incentives, as I mentioned before, this one is a great one. House hacking. So it's literally you buying your house, somebody's paying it in the basement or renting the space, and they're paying your mortgage for you or helping you with your mortgage. It can be done with a basement, a duplex, a triplex, whatever it is, right? But that person's helping you pay off your mortgage faster. And last but not least, the newcomer mortgage programs. So if you're a newcomer to Canada, The path to ownership may feel as if it's far and daunted, but the good news is a lot of major lenders actually offer newcomer mortgage programs designed for permanent residents and visa holders, for certain visa holders. So this slide now, I feel strongly about because they're very distinct. The three different types of protection connected to a mortgage is first, the mortgage default insurance. And many times people hear this and they don't really understand it. So the mortgage default insurance is basically mandatory if your down payment is less than 20%. So it's tacked on to the mortgage. So you don't really see it separate. It's tacked on to the mortgage. And the premium really ranges from 0.6% to 4.5% of whatever the mortgage is. So what's critical here is this insurance does not protect you and your family. It protects the lender. So if something goes wrong, they're protected, they're covered, they get back their money, but not you and your family. This mortgage, this kind of insurance is also not portable. So if you change lenders, say you're with Scotia and you change to another lender, you have to get a new default insurance. The second is mortgage life insurance. So again, this type of insurance protects the lender and is added to the mortgage. The lender owns the policy, not you. The third is term life insurance. So this insurance is protection for you and your family. It is totally separate from the mortgage and moves with you no matter where the mortgage is. So yes, make sure you and your family are protected. Okay, so I want to spend a little bit of time on this slide because I need you to understand that there are other costs associated with getting a mortgage, right? I don't like surprises, especially for my client. So the purchase price is not your final number. So you need to know what your numbers are so you can budget accordingly. So the down payment is one piece that, and that's probably most times what people focus on. But beside that or behind that, there are other fees. So there are closing costs, which typically is 1.5 to 4% of whatever the purchase price is. This includes legal fees, land transfer tax fees, municipal tax fees, home inspection, appraisal if one needs to be done. If you're buying a condo monthly fees or status certificate fees. So there are a lot of fees associated with that mortgage and the closing costs that a lot of people sometimes tend to miss. So again, get your numbers so that we know where you stand, right? How long does it take? I get this question a lot and it's valid. So the answer is it depends on where you are starting from and how disciplined you are. The process starts with the mortgage consultation. In that conversation, we really look at your income, your debts, your goals, and then we create a final full picture. From there, we move into gathering your documents and going through pre-approval or the pre-approval process. Sometimes that can take anywhere from 1 to 2 weeks. Once you're pre-approved, you begin your search, and that's where Stephanie and Max comes in. And you go to them with real numbers and confidence, right? They're not driving around not knowing what your numbers are. So when you find that property and the offer is accepted, your conditional approval gets submitted to the lender. From there, the lender reviews your paperwork, and that usually takes sometimes 5 to 10 business days. The conditions get satisfied, and then the final approval is confirmed. And then we move to closing where the key is yours. So for a buyer who comes in ready, they usually around 30 to 60 business days, they're ready to walk in their home. But for someone who needs time to build their credit, grow their savings, or address other financial issues, the timeline can be anywhere from 6 to 18 months. It depends on the individual. One thing I want you to understand, though, is that waiting is not a failure. That is a plan. Knowing your timeline means you're working towards that specific goal and you're not just sitting there waiting. So yes, that's my takeaway for that one. So with this conversation, I get this with, people who come to me, they're like, well, Remain, I already have my person, or I already bank with TD or Scotia or whatever, or BC. Should I just go there? I'm going to be honest with you. I'm not going to be a salesperson here. You have the option to go to your bank, and I give my clients that option. However, when you go to your bank, they offer one shelf product, one rate, or their rates, their terms. They're not obligated to find you the best mortgage. They're obligated to give you what fits in their portfolio. When you work with me as your broker, I have access to 65 plus lenders. That includes major banks, credit unions, alternative lenders for clients whose situation don't fit credit traditional mold, right? I work for you, not the lending institution. My job is to find you the best rate, the best terms, and the right product that fits your needs at that moment in your life. And here's the part I want you to highlight from this. A mortgage broker doesn't cost you anything. My fee is paid by the lender, not your mortgage fund. So you get the full market access, real advocacy, and a professional person working on your side at no cost to you. So the question is, should or shouldn't be, should I go use my bank? So from during your conditional approval, you've done the hard part, you found your home, you've saved, you've done everything, your offer was accepted, you're into the conditional approval now. This is the moment where I tell people the work isn't done. And what I want you to do is make sure that you stay the course. Don't take on any new debt. Don't buy a new car. Don't apply for any new credit card. Don't make any large purchases unless you're paying with cash. And don't leave your job, because it's not over until you have those keys and you've moved in. So don't do anything, and then don't co-sign for anyone either. Any of these changes can affect your debt ratio, your credit profile, and your income picture. And it can really tank the deal and prevent you from getting into that hole. So I tell my clients, stay the course and let me handle the rest. What I want you to take away from this is, when you get out there to get your mortgage, what is it that you want? But you need to sit with someone to make sure the numbers work, right? It's one of those things that you really have to hone in on and make sure it happens. You don't need to have a certain income. You don't need to have the perfect score. You don't need any specific amount saved. What you need is the willingness to understand where you stand today, right? So we sit down, we do a 30-minute introductory call typically, just to find where you actually stand. And then we build from there. If we find out you're ready, then we schedule a discovery call where we take it a little bit further. It's no pressure, no judgment, just clarity. So my contact number is there on the slide, and my QR code is there. If you scan it, it will populate my schedule. So you can book a meeting with me. I want to introduce you all to Max and Stephanie from the Stuart Lau Realty Group. So the relationship between a mortgage broker and a trusted realtor is one of the most important piece of the puzzle as a first-time home buyer. When your financing and your real estate team are aligned, it makes you, or your negotiation stronger, and you can close with confidence. Stephanie and Max, they're great folks. They know their stuff, very knowledgeable, very professional. So with that being said, Stephanie and Max, it's all yours.
Okay,
Okay.
thank you.
Thank you, Romaine.
Yeah.
Why don't you
I'm
stop
going to stop
sharing?
sharing. Sorry, I'll stop
No
sharing
worries.
right now. There we go.
Great.
You guys have access now, right?
Yes,
Okay, perfect.
pulling up our slide there. And do you guys see your path to homeownership?
Yeah.
Okay.
Well, thank you, Romaine. Thank you for sharing that information. I definitely learned some things. I learned some new things about the insurance. So that was very interesting. To those on the call, was there anything that stuck out to you from Romaine's presentation before we move on? That was great.
Yeah, if you have any questions.
So yeah, if you do have any questions, just keep note of those. When we get towards the end of the presentation, we'll be able to address that for you. Okay, so yeah, we're Max and Stephanie. We're the Stuart Low Realty Group. As I said at the beginning, we're going to be talking to you about the market, giving you some tips. And Max searched some real-time properties, and he's going to show you what you can buy and where, just to give you a little bit of an idea on where prices are at today. Max is a realtor.
Yeah.
I myself was a realtor for about 10 years and I've transitioned my role. I'm focusing on really honing in on assisting folks with investing and buying and understanding how to do that strategically. So, as a partnership, we're really passionate about real estate. We've been doing it for a long time. We have a lot of experience in the market, and we're excited and happy to share that with you. Anything you want to add before I go in?
We're really passionate about what we do. We're also passionate on helping people in our community and making sure that we're doing the right type of purchase investment for that person. Everybody's journey is different. People are at different stages. Even if they're at similar stages, your specific dynamic is different with it, whether it's your family or whatever. And that's why it's good to have a good team with mortgage broker and real estate agents that care and understand and that are really here to pressure you.
Yeah.
Yeah.
So there are a few different stages you might be at in the market today. One is folks that are looking to purchase that want to trade up. As mentioned in the next slide, we'll get to some numbers, but prices have really gone down. So there might be those of you in the market that are ready to trade up. So as mentioned, prices are down. And one of the opportunities that we're seeing right now is the ability to shift into a larger property, a property that will probably hold a lot more equity and value as the market starts to increase again. So great time, especially from like an investor's mindset to be able to take advantage of not only the price, but also some of the other conditions in the market, which we'll talk about a little bit. Another opportunity is to be able to leverage off the equity that you might already have. As Romaine mentioned, that could look like maybe mom and dad, or maybe it's a co owner that you're going to go into. They may own a property and have some funds that they're willing to invest with you as you get ready to purchase your first property. They're able to do that utilizing some of the equity that's there. And the equity would just be the difference between the current market value and then the value where they're at with their mortgage. So that little range is the equity that you're able to use. And it's definitely an opportunity and a strategy to be able to accelerate your wealth. Another one is, of course, building long term security. So every mortgage payment builds ownership. Renting builds someone else's equity. So, this is an opportunity to get into the market and secure something for yourself where the majority of your payments, you're putting them into you. They're going into your equity. Payment after payment, you're really investing in yourself. You're investing in your future. You have that property to be able to leverage in the future, whether that be looking at your retirement, investments for your children, school, and whatnot. So, home is more than shelter, it's actually an investment. It's something that you can leverage over time. So, here's some numbers that are in the market today. This is pretty interesting. We actually have a state where the volume of sales, so how much market activity that we're having, is 19% less than it was than last year. So you can see that inventory is improving, but not as many buyers in the market. So again, not as many people are purchasing, so we're having less sales. What that looks like or what that means for you as a buyer is there's less competition. There was a time when the market was really, really hot and properties were selling in a day or two. I remember all the time my listings, like I just put it up, sold. It was really quick. But now we have the opportunity where it's not that highly competitive, even feeling the pressure that you have to make a decision quickly or it's gone. You'll have the opportunity to go and shop around and probably actually view a property a couple of times before you make a decision. You're going to have the ability to negotiate things as a buyer. So the power really is more in the hands of the buyer today. And that is a wonderful place, especially again, if you've been motivated to try to get into the real estate market, you've been on the sidelines kind of waiting. Now is really a wonderful time. We have seen a decline in prices. So from last year, depending on the market segment, that means whether it's a condo, like a townhouse, a detached property, or the area, 5 to 6.5% from last year. So for the last couple of years, we've been seeing a gradual decline in the prices. And I think most people are saying our prices are down back around pre-COVID, right? If I'm correct.
Prices went up by 20%.
Yeah.
And the market was up by 20%. We're pretty much just crashed back down the 20% that it gained. So it's not necessarily a market crash, market correction
Yeah,
or
market
adjustment.
correction. We didn't, yeah, that distinguishing the difference between the crash and just the correction of where things are. So this then again creates that strategic entry point where again there's that opportunity if we're down towards around where that bottom may be roughly. Once things are settled, we'll start to see the market go back up again. So this would be a great time to buy in that cycle. Again, increased inventory, more choices just means more choice. And then again, more room for negotiations. So not a crash, not a frenzy. It's a strategic buyer's market. The condo market has definitely shown the sharpest softening. And I'm sure you see inventory for condos are quite high. It's definitely a market segment that has been moving more slowly. And we've really seen prices come down in that area, which again is just a wonderful entry point for people who are looking to invest, to pick up a second property, or to be an option for a first time buy. When we're looking outside of the Toronto core, generally prices are more expensive in the core of the larger cities. And as you gradually begin to go out, you'll see that prices will begin to go down. So overall, outside of Toronto, negotiation room is real and the entry ports are more accessible than they have been in many years. So what this means here again, opportunity is here if you're prepared. That's why we're here today. We want to make sure that you are prepared, you have an understanding of the market and can work things in your favor. So you have leverage now. Prices are not increasing blindly every week. Before we really did, we didn't know how many people were going to come. We didn't know the values that people were putting in on bids. We didn't know exactly where, things were going to go and prices were just going up and up and up. Right now, because the market is slower, things are a little bit more stable. Sellers a little bit more open to negotiation. And buyers know that. They recognize that this is kind of, their time as they're coming. And we as your agents, we're very well aware. We've helped sellers, so we know what the sellers are looking for. We help buyers. We know what to ask for. We know what to push for you guys. Hybrid strategies deliver more. So there's rent assists your income. Family partnership structures are more powerful in this calmer environment. And that was things where Romaine mentioned like house hacking. That's when we talked about things like co-ownership opportunities or again, leveraging the bank of mom and dad. How can we look at things strategically, put things together to be able to take advantage of this unique market that we're in today? Condo entry points outside of Toronto are more realistic. So again, Max is going to pull up some of the real properties that are up and live right now and show you some of these key markets where again, the entry points are great, really great. So markets like Hamilton, Oshawa, Kitchener, Waterloo offer genuine value. Okay. And then you're capitalizing, not waiting. We're not waiting for a crash. I think that would be a loss to folks just sitting and waiting and waiting and waiting and waiting. We're down there. Max had a fun analogy, which I'll let him go as soon as I'm done with this slide. I'm going to make you share it. But, everybody's kind of waiting. When are we going to get to the bottom? When are we going to get to the bottom? And we don't want to see folks miss the opportunity to get in because we're definitely around in that area. You're entering in an accessible market with real buying power and real options. If everybody goes back and enters the market at the same time, we're going to start to see the bidding wars again. We're going to start to see that competition and the buyers start to lose some of their power and some of their leverage. So preparation beats patience, strategy beats speculation. I'm going to let Max take over here. But good metaphor.
So back to where we were. Thanks, Steph, for putting on the spot.
Yep.
So we were at Costco the other day and I thought about it. When you saw the box of mangoes. So mangoes were on sale. Usually they're like $15, $18 or whatever for a box of mangoes. And then they were on sale for like $8. Everybody was grabbing all these mangoes. So I thought about it. I'm like, why is it that in real estate, when prices are high, that's when you see the frenzy? Everybody's doing the competing offers. Everybody's, racing to get something in the prices. Like it's even hard for us to tell you what a property's worth. And in a stable market like right now, we can so easily tell you, this is what the market is doing. And then when like mangoes, when they're on sale, people are so hesitant. They're like, oh, is it going to go down more? Or they're just nervous about getting into the market. Investors and smart buyers know when things are on sale, they get into the market and, they get all the mangoes, right? So that's the mango story that Stephanie so likes more than my other analogy, which was real estate's like the stock market.
It's a good one too.
Okay, so when prices are high, That's when you sell. When prices are low, that's when you buy.
I'll just pass it over to Max now.
You follow the market and the structure, and you have a good team around you to help you navigate that, to help you read the tea leaves, so to speak, and determine a realistic entry price for yourself. What is your situation? Why are you getting into the market? What does your income look like? What is your savings like? Are you planning for something with your family, your kids, and whatever else? How big is your family? What do you need? So make sure that you're getting in at a realistic entry price that you can manage, that you can support and you can sustain and be comfortable as you're going through with that. Build your cash target. Make sure that you have the right accounts. Make sure that you're using the right first-time home buyer programs. Make sure you have all the money for the closing costs and extra money in reserve in case something does happen mistakenly. So get fully underwritten or pre-approved. So there's a big difference between getting pre-qualified and pre-approved. And she was so right when she said, Romaine, that you should be going to a mortgage agent first. A lot of times in the market, people come to the real estate agent first, and we then have to refer them back to a good mortgage agent or mortgage broker, where it's better for you to be fully pre-approved instead of pre-qualified, because qualification is like, okay, your numbers look okay. But if you're fully approved, that means you can actually buy immediately. That gives you more negotiating power. So it's good to get your full qualification and approval so that you can get a good property. Sometimes when you go to put an offer on a property, if you are fully approved, you can do something like waiver conditions if you get the go-ahead from Romaine. Like, okay, you fully qualify for this. And that puts you in a better negotiating situation, and they'll put a mortgage condition on. And the person without the mortgage condition, even if their offer is lower, sometimes they'll get that property compared to somebody who put an offer that's higher. But the seller's like, I'm not confident that you're going to get that mortgage. I know that this is cash in hand, so I'm going to take that deal. So getting fully pre-approved is important. Decide if you want to live inside of Toronto or outside of Toronto. Living in Toronto, to me, is a lifestyle choice. If your lifestyle and income dictates living in Toronto, whether it be because of commuting, whether it be because you like a certain area, it's close to your work, or you like the activities or the style of an area in Toronto, or even the culture, depending on, your background, I find you just can leverage more bang for your buck. You get more yard, you get more square footage, cheaper condo fees and stuff like that. And sometimes no condo fees in the same price range that you would have in Toronto or just outside of Toronto. Act when the numbers align. So timing is key. Being prepared and making sure that you're ready to buy, that's so important. And making your decision off of emotion, not off of emotion and fear, but off of having the right numbers. So right now the market is calmer. There's less urgency. You have time to do more due diligence, like doing your checks, inspections. You can do your insurance check. You have more time to make a really good informed decision. And when the market is not as calm it is right now, it's competing offers. They list a property on this day, on a Monday, and they hold off. Well, they'll list it on a Saturday so they can have an open house on a Sunday. And then they'll take offers on a Monday or a Tuesday. And they'll come to us and say, okay, how much is this house worth? Okay, well, now there's 25 buyers, all with the same idea of what they're going to do. We'll give you a general number, and it can go anywhere in between blank and blank. Not much we can do in terms of telling you exactly what it's going to sell for. Inventory is healthier. So there's a good amount of houses on the market right now, and you get to choose, more than you did before. You get to negotiate more and make less mistakes and have less emotions in the buying process because you can take a calm look at it. You have more negotiating power. Sellers are realistic. They know that they're not in a competing offer situation. So you can put more conditions on the property. You can put longer conditions on the property, whether you put a 7-day mortgage condition, if you put a 10-day inspection condition, lawyer, you can put so many different conditions on to make sure that you feel comfortable and have the time to make the best offer possible. So sometimes you're thinking that you have to have this huge down payment. You don't. You just make sure that the numbers are right. Then make sure you check that out and you can get into the market. A lot of times people are just afraid to get into the market. They qualify and they don't know that they qualify. So make sure that you check your numbers and your situation and get in there. Do you need liquidity and planning? You do need liquidity and planning. You need to make sure that you have the right reserves, the right money, and you made the plan to buy. Structure matters. The buyers who win are prepared. not just who rushes in. So make sure that the deal is structured properly, make sure that your finances are structured properly, and then hop in the market if that works for you. So where buyers are entering the market right now, first time home buyers, there's a sweet spot. So everybody's situation is different. These are what I would consider a realistic number to get into for, maybe a young couple, somebody just finishing school or who have help from the bank of mom and dad. And if you look outside of the GTA core and you see numbers like 450 to 550,000 in Hamilton, similar in Oshawa, Kitchener. If you look at townhomes in the GTA, I'm going to show you a bunch of properties that match these, run through them.
Hmm.
Yeah, I'll get the properties up.
Great.
Give me a second here to share a different screen. Share. Hmm, Here it is. Okay. Can you guys see our property on here? If you can put your mic on for a quick second, just say yes or no.
Yeah.
Perfect.
Yeah, I
Thank
can see it.
you. All
Great.
right. So here's a property in Cambridge. This is a townhouse. I don't believe it's a condo, but it may have a pottle fee, so a parcel of land fee. That is basically just landscaping so that they do your snow removal, they do your garbage takeaway, and that's basically it. It doesn't cover windows and roof. Everything else is your own. But this is basically a freehold house with a pottle fee attached. I'm going to show you quickly the location before I go through the property and why I picked these here. So this is Cambridge and this is the 401. So if you're close to the 401, but you still live in the Toronto area or you need to get to London or wherever else, you're in between Kitchener and Cambridge, right off of the 401 there. So I try to pick places that are off of the 401 or close to a highway and around amenities. So this property here is 550,000. Taxes are 485. 3-bed, 2-bath, 2 parking spots, and between 1,500 and 2,000 square feet. So you have the parking in front, you have the parking in the garage, covered. Back area there. Comes the laundry. And please excuse the pictures. So you have the kitchen there. And these are great starter homes. This is a 3-bedroom starter home. You're getting in the market for about 550,000. Kitchener and Cambridge is a very hot area. There's lots of tech, there's lots of jobs, there's industry here. And when you do see 550,000, Kitchener likes to hold competing offers. So this might be a $610,000 property. So that is one thing about Kitchener. And as a realtor, you have to know your markets and be familiar with the offer structure and how agents stack their conditions and everything. And that is one thing we can attest that we are familiar with multiple markets and we don't want to get into markets or negotiate in bad faith, not knowing what we're getting into.
It's great properties and great prices.
Yeah.
Yeah. Good.
Yeah, I'll get to another one here. This is a condo in Kitchener again. So I'll show you the map. Not too far from where we looked at again. This again is the 401. And this here is close to where I showed you the other property off the highway. And if you need to go to Toronto or if you need to go to London or south to Brantford, you are in a great area there. This one has been on the market for 49 days. So it's not likely holding competing offers. That time frame is done. So getting in the market with a 2-bedroom, 2-bath, 1 parking space, 1,100 square foot condo, approximately. You can't get that in Toronto by any means. And this is a nice area. What I like about this area is that it's right off the highway. It is close to a huge green area. And if we could get a property like this, we would and put it in our portfolio. So lots of amenities in this condo here. It's very clean. It's very new. Workout area, library, lounge. This is actually one of the better looking condos. It backs onto the green space. There's a lake that's behind it. Conservation. This is one of those conservation areas that will always be conservation. Not like when you have a green space and all of a sudden they put a plaza behind it. This for sure I know is protected land. They're not going to do anything with this. And this section here is the only area that they're allowed to build outside of there. That is not going to be condos, apartments, factories, or anything. All that stuff is somewhere else off of the 401. So this is fully protected back here, and there's the city. And right over here is the 401. And a nice, nice unit. Okay, so that's Kitchener. I tried to go between east and west of Toronto and south as well. Brampton is pretty much Toronto, so I didn't go too far north. Here's a property in Ajax, 3-bed, 1-bath. I believe this is fully residential, no condo attached. I don't think there's a policy in this one. So 639, 640. So 2 days on the market. I'm not sure if there's holding competing offers on this one. I don't think so from what I looked up quickly. And this should be close to the 401 to show you quickly. And I'll go through these a lot faster because we're getting close to time for questions. I believe that's the 401 right there. So 3-bedroom, 1-bath, nice green area as well. So the numbers that we're talking about, or we're going to talk about, are very affordable for this property, the backyard. Similarly, in Hamilton, 650, 2-bed, stacked townhome. This is not directly off the 401, but it's off the Lincoln Alexander. So close to the 403. And last one, I'm going to show you what you get for 680 in Toronto. 2 plus 1-bedroom condo, 1 parking spot, 700 square feet. It's not a 350 square foot condo. For a little bit less, but that's how Toronto is. This is right by the CN Tower. Nice building, but obviously you can see the rooms are a lot smaller. There's probably just a closet right here. And this is your view. This is the plus 1-bedroom probably. And even with the wide angle camera, you can't see much. So that's quickly the properties we have there. I'm going to open up the other slide again. Just wanted to show you that so those properties are realistic. You guys can see I'm assuming the slides again. Okay, awesome. Yeah, so $500,000 property, your minimum down payment 5% is $25,000. Estimated closing costs $10,000 to $15,000. So you'll need in pocket liquid cash about $40,000. There's your townhome in Toronto, $650,000. We looked at one that's $680,000. There's your $25,000 down payment for the first $5,000, and the next $10,000 is slightly different because you have to pay a different price in Toronto. That's another added thing that you have to look out for. And your down payment is $40,000 there plus closing costs. So the total cash needed would be $55,000 to $60,000 on a property in Toronto on that side. So why this works here, you get more living space outside of Toronto. Usually excluding the Toronto downtown, you exclude the Toronto downtown land transfer tax. Stronger appreciation in emerging GTA markets just outside. So you can get in easier and you can get a lot of good appreciation. You get more square footage, outdoor space, backyards, and significantly lower cash requirements than buying in Toronto. If you live in Toronto, you get reduced commute time, lifestyle and amenities, like I mentioned before, and long-term appreciation. So Toronto skyline, no matter what it looks like, will always go up. So for the same budget, you get a different leverage. And depending on what you want to do, you can live outside of Toronto, like Hamilton, Oshawa, Kitchener area. Brantford is even cheaper. Lower cost of entry, faster equity build, less financial pressure, more space for your family and your future. You could also do option B, which is house hacking, something like buying a duplex. You
Mhm.
rent downstairs, living it yourself for a 700 K property in, say, Oshawa or Hamilton. You have a legal basement, depending on the laws or the rules in the municipality. Sometimes it's better to make sure that it's legal. Your rent that you would get is about 1,700 to 2,000, and it may help you qualify for a mortgage that you didn't think you can qualify for. And Remain can attest to that, that
Mhm.
sometimes having that additional income makes you qualify better. You have reduced monthly carrying costs because you have somebody else helping you with the utilities and extra stuff like that. So, what to consider if you should buy or not. If you have less than 5% plus closing costs, if you plan to move within the first 2 years, if you're carrying high interest closing debt, if your income is unstable or unverified, you shouldn't buy. Unverified income, you might have a cash job and it's hard to prove that. There are ways to qualify, whether it's a B lender and certain programs that Remain can let you know about. You're buying based on emotion, not numbers. Those are some of the reasons why you shouldn't consider buying at the time. If you are considering to buy, it's best if you know your price. If you want to enter the Toronto market, make sure that you know if you want to do a hybrid model or fully, if you work remote, if your commute to and from or an equity strategy you want to build first. Space and value matter to you, and location a prestige. So some people like to have a big house as their starter home and they want to make it look better and feel like that's important. That's another thing. So Toronto is not the only path to wealth. Understand your buying range. Know exactly what markets can do for you based on the numbers. Make sure you know what you're getting into. Confirm you have the right amount of money to get into it. Make sure that you have your closing costs reserve fund. Build a timeline. Make sure that it's clear. Does it take 3 months to get in, 6 months to get in? Be realistic about where you are, what you need to do, and the timeline to get in. You put an offer today. What is your conditions on this to 7 day for financing? When do they want to leave? When do you want to get in? Are you selling a home? Are they buying a home? That all matters in your qualifying time. So that was quickly as we got through there. Now we're going to open for a question and answer. Leave this
Yeah, we could leave it open so they could have the contact information.
exit. I got to do that.
So we'll leave that open for you guys. You can jot down the contact information if you need. Is there any questions, any feedback about the presentation today?
You guys can take yourself off mute or ask questions in the chat.
If you feel more comfortable typing in the chat, that's okay too. Thank you so much for being with us. I hope that you found the information valuable, giving you a good overview of what's in the market, what's available to you, how to take strategic action, and really covering all the bases of all you need to know as a first time home buyer. So we thank you so much for your time today. Thank you for being with us. Feel free to reach out to Romaine, myself, to Max if you have any specific questions or to book a consultation and have some time to go into things in more detail. We're definitely available and happy to do that.
Or Romain, if you had anything you want to touch base and follow up on.
Like we said, knowing your numbers really matters. And, I'm pretty sure as realtors, Stephanie and Max, you guys see it where you're driving around town with them. But yes, it makes a difference when you have, your strategic and your thinking and what you want to do going forward in your home ownership journey and work towards that. So with that being said, thank you all for attending. Appreciate it. Until next time.
Yes, thank you so much. So we do have the recording. We'll make sure that we save it. And if you needed a copy of it, just feel free to reach out to us. We'll make sure that you guys get them. Okay. Thank you
Thank
so
you.
much. Okay. Good night.
Bye.